Hey everyone, welcome to the Newbie Real Estate Investor of New Jersey podcast. I'm Jonathan Boyle.
And I'm Joey Chan, and today we have a special guest here today with us.
David Hansel.
And let's just get right to it. So David, can you tell us a little bit about yourself, maybe a little bit of how you got started in real estate?
Sure. So I got started in the real estate business back in 2001. Originally I got my real estate license, was selling residential and some commercial properties. During that time from 2001 to 2007, I also started flipping homes and did some new construction projects. I met up with my now business partner in our company, Alpha Funding Solutions, and we started lending money back in 2007 and went out and raised capital. Along the way, we've continued to direct invest, doing ground up development projects. And we also own and manage a large portfolio of multifamily apartment buildings up and down the East Coast, which we own through a sister company, Lucern Capital Partners.
Nice, awesome.
Wow.
So can you tell us a little bit about how you sort of came up with the idea to start Alpha Funding?
It was kind of like by default, right? We were investing in properties and we had capital that we were putting to work, and through a mortgage banker relationship we were asked if we would be a private lender on a deal. Just like a lot of investors today are going out and raising capital, whether it's from us as a lender or for down payment money or all from private lenders.
Right.
So the deal worked out great. My partner and I put our money together into some of these deals in the beginning, and the returns were nice. And as it started to grow, we built out an investor program where we could raise capital, because it takes a lot of money to lend.
Right.
And at the time, there wasn't large institutions that were providing capital. So we aggregated a big pool of retail investors, and that's something that I'm really proud of in our business today. We have about 200 retail investors, and we control about $60 million of just retail money. We also have some institutional capital now, but building and fostering those relationships is exciting, and it's the same thing that a newbie investor is involved in on a daily basis, trying to figure out, even just on your first deal, where are you going to get your down payment money or your mortgage payment money. So we started lending and the market continued to grow. And as the borrower base grew and the market grew, our capital base, it kind of organically happened, and we built our team around that.
Nice. So just so people have an idea, what year was this when you first started the Alpha Funding?
So Alpha got started in 2007.
Okay.
It wasn't until like 2010 that we started really doing some significant loan volume, and that's really when we went out and started to actively raise capital. And it was a challenge at first, like investing, and it was interesting. It was, I forgot when it was, but at a point when we were really trying to raise capital was right after the whole Bernie Madoff scheme went down. So every time we talk to people about investing with us, why we make these loans, how we're protecting ourselves, what the returns are. The returns at that time were very attractive. Rates have come down quite a bit.
Yeah.
But it almost seemed too good to be true, which is interesting, because when you're raising capital, sometimes if you promise too high of a rate, even if you know you can achieve it, for like a non-sophisticated investor, they may actually be more leery to put money in at a higher interest rate than they would at a lower rate.
Oh, wow.
And I always say to people, if I could go back and change something, I may have offered our investors a lower rate of return initially. It would have been a big difference in a lot of ways for us, but it also helped us grow. So, whatever you say first, and when you're asking for capital, you really, you're setting the rules, but you got to speak with confidence about what you're going to do and how you're going to protect them, what risks are involved.
Nice.
Yeah. Wow. That's definitely a lot to digest. That's a lot. That's very high scale. So if it's okay, I could bring it back down a little bit. for some of the people that are here listening that are probably like just brand new first
Sure.
deal. Can you elaborate maybe on like your first fix and flip that you ever did, or a funny story related to some of your first deals that you did?
Sure. My first fix and flip isn't that great of a story, so I'll tell a different one. Once we were lending, that property was, I was down by the Jersey Shore at that time. It was a house in Elberon, which was a section of Long Branch, and I got some money from a friend, and we were able to do the deal and borrowed some money from a private person as well. But kind of an embarrassing story for Alpha was when, I think it was back in 2011, we were buying a lot of property in South Philadelphia. We really felt there was a lot of upside potential. And things were really cheap, and sometimes cheap is expensive. I know it's a very cliche term. So we bought a house, and Kyle Altino, who works with us, he's one of our underwriters. He used to be involved in acquisitions. We bought a house through a wholesaler, and it was like $40,000. And we were going to have the plan with these row homes was to come in and do a renovation. We had spec'd out like what it would cost to do a renovation, a full reno on these homes. And we sent our contractor over, and he calls us and he said, you know, I think you gave me the wrong address. There's no house here. And I said, what do you mean? Of course there's a house there. We like whatever. So, well, apparently he's like, no, there's a bulldozer on the lot actually there now cleaning up debris. I go, what are you talking about? And he's like, so he took pictures, and it turned out that the house had been on a demo list in Philly. And they usually post a sign. To this day, we bust Kyle's chops because we don't know. I don't think it was on there. Like, someone could have ripped the sign off. We didn't have any way of knowing it had we not inquired about the city about, is it on a demo list? And we learned our lesson after that, so wound up buying the lot for $40K and had to pay the city $15,000 to demo our house. So it was, and I like to tell stories of like the problems because it really helps you see like, and we're pretty experienced at that time, and I always joke that like you can't make up this stuff. Like every day a new problem comes about, and so to parlay just in terms of what we do on the lending side, we work with so many new investors and we really enjoy the experience, and so we try really hard to provide information to them and see risk that they may not see, or like try to educate them on insurance, where most people feel like insurance is just a waste of money, and how important it really is. So it's a pretty embarrassing story, but it's funny, and we eventually sold the lot a few years later, and I think we lost a few $1,000, but all in all, it was wasn't too bad. But but so, you gotta do your homework.
So you never built on it, just.
We were looking at building a new home again, and it just made more sense for us to sell off the property. And we had too many properties, so we raised a lot of capital. And this is actually an interesting thing because I always wanted, I don't know if I've told you guys this story, I'd love to do a video someday. I don't know if you've ever seen The Evolution of Dance. It's a video on YouTube. If you've never seen it, go watch it. Maybe pause this and go watch The Evolution of Dance, because it shows like the dance moves through history, right? And all the different dances for different eras. And I wanted to do like a video of the evolution of the real estate investor, because like the first day they go out to an event and they're like super excited, they watch some late night TV show, like holy crap, I am gonna be a real estate investor. And they go to the thing and they start talking, they're super excited, like I'm gonna wholesale, I'm gonna get some money to wholesale, then I'm gonna rehab, and I'm gonna hold. And so they do that, and a small percentage of people, I've seen guys that just built amazing businesses, so it starts somewhere, but they go out and they start to buy, or they buy their first place and they hopefully make some money, and they get like they get really excited. They're like, woohoo, I'm doing great. Next thing you know, they start buying up everything that they can find because they're like, yeah, I could just do this, this, and this. And then you're like, oh my God, I don't have the resources to handle these, and the money's a little tight and the cash flow's tight.
Yeah.
And then they collapse a little and then they come back again. And like, and to our story, when that happened in Philadelphia, we had raised a lot of money, and we went out on this buying spree, and we got over our skis, right? We bought too many properties. In the end, it worked out well because that market appreciated. We were able to sustain it and get the rent. So I always try to say, like, you know, I think we all suffer from it. Like, you're of that mentality to be an entrepreneur and do stuff. So you have to sometimes temper that, and you know, hopefully you don't get stung by that. But
yeah, it's funny you mentioned that, because I think I'm kind of going through that myself, where, you know, I'm just buying a ton of properties and, you know, renovating it, and then it's like there's so many to renovate, you know, you kind of like, oh, I don't know what to do, you know. Yeah, but thank God I'm kind of at the end of that stage and not the beginning.
Yeah, no, I feel the same way, because I guess maybe acts of God or something. You saw how many deals I sent to you guys, and like something with title, something with an oil tank, something with a deed keeps stopping me from buying it. And it's like, well, okay, maybe I should slow down, rethink everything. And
it's hard because we want to all grow and do better and make more money. That's why we come out every day to events. That's why we look for properties. And so the mentality is, the more I do, the more I buy, the more I make. But that doesn't always translate. And there's no perfect path. And I'm not saying not to be aggressive, but, you know, listen and understand risk, listen to people around you, really be true to your numbers. If you don't understand the numbers, call us up. Like, a lender is a great place to start. You know, you want to understand, like, where that is. Like, we stress test every single deal. We have a whole model that we do internally, and then we look, like we've talked, right? Like, as you're growing, we talk about, well, what happens if all these properties get backed up at the end and you're sitting on all those dollars, and then you can make a business decision on a risk or reward. You can make a decision on the investors, the private investors who are backing you. You could say to the private investor, hey, look, you know what? The days on the market are a little bit longer here. If we are borrowing money, we may need to be in a position to hold the property a little bit longer, and this is how it can pan out. So, like, I think as we get educated more, you can kind of make better business decisions, but you always have like, you know, like one on each shoulder, like buy more, make more, become bigger, and this side's like, oh, I don't want to get hurt, you know. So you got to kind of balance that out.
The risk reward, So can you kind of talk about how a new person can sort of actually, you know what? Before I even talk about that, what are the different ways a new person can kind of help finance or get financing to do, let's say, their first flip?
Sure. So as I mentioned in the beginning, our company, Alpha, is a hard money lender. We like to say the softer side of hard money, which speaks to how we work with our borrowers and treat them. And until you've worked with lenders, you don't really appreciate what that means and some of the flexibility and speed. But it's really, really easy. And I always say to people, when you're getting started, I'll talk about the money side, but like, you want to build your team. You need to find the right contractor. You need to find the right realtors. Start talking to the people. Fake it till you make it. Go out and pick a town or two you're going to look at. Start learning the inventory and start bringing your contractor in to price out deals and see what it looks like. From the lending perspective, it's really simple. Like for Alpha, you know, it's very, very minimal doc. So we create a lot of paths for people to connect with us. But you fill out an application one time. That application, all it is a 2-page personal financial statement, which just lays out your assets and liabilities, you know what you do own and don't own, and what income you do or don't have. and it's just a section to detail experience. And we do pull credit and we pull a background check. And then there's a deal summary sheet. If you don't have a deal and you just want to get pre-approved, then basically you're just sending that in. And as soon as you send that in, within 24 to 48 business hours, one of our underwriters will give you a call. And that call is the most important thing to us as a lender. We want to know who we're lending to, and we're going to talk to you about the types of deals you're looking at, what money you will need, and if you don't have money, maybe we can help guide you to finding someone that can bring capital in for you to leverage the money we have. That's provided that we're comfortable that you can handle a project, right?
Yeah.
And so you have to be realistic about your limitations. So that call takes about 15 minutes, and then literally after that, we're, if you do have a deal, we're just ordering an appraisal and getting your budget and getting a few docs to set up for closing, and we can close the deal in a week. I always tell people 2 weeks and under, but we close a lot of deals in a fast time. So getting set up is super important. Like, get that out of the way. Like, the last thing you need is when you're going to buy your first place is to have to start doing all these new things you never did. Oh my God, I now got to find a contractor. I got to find a lender. I got to find a title company. I got to find insurance. Start building that out in advance and be ready to rock and roll when you find the right deal.
Yeah. All right. Wow. That's very true, because you don't want to go in blind or take more time, because it does cost a significant amount per day if you really calculate everything, depending on the deal. But I see our cameraman saying we're running short, so
three minutes.
So let's get back to, I guess, final question for you. What's the best piece of advice you would give to someone that's new or getting started?
So the best piece of advice I can give to anyone that's getting started is get educated. And there's a couple ways to do it. It sounds generic, but be committed to, if you like going out to events and socializing, go out to events, and don't just go to one, go religiously. Maybe pick 2 events every month and go to it for 6 months. It's like going to the gym the first time. You're gonna go 2 or 3 times and be like, oh, nothing happened. I mean, I suffer from that problem myself, but go and commit to a longer period of time. And then start reading stuff, whether it's like there's a great website, Bigger Pockets, that has a lot of information. Go on, call up a hard money lender like Alpha, talk to them about their programs. Like, it's just an education piece for you. When you're at these events, you can find contractors. So like, meeting people and building your network and asking them what's good information to read. The last piece I'll say, which is always the hardest, is you have to be a slightly good judge of character, because in the community of real estate investors, there's a lot of really good people and smart people, and then there's also people who you don't want to follow their lead, or maybe don't really know what they're doing but want to try to portray themselves in that place, and sometimes it's hard to tell between them. But be committed to education, to networking. There's not an exact path. So long as you get up every day and you're filling some of your day with education, you're going to be in a good place.
Yeah, awesome. So last thoughts, I guess, would be if you can share with our audience your information, where you are on social media, how to reach you guys.
So alphafunding.com, that's www.alphafunding.com. You can send an email anytime to info@alphafunding.com. That goes to my entire team. Someone will get back to you right away. That's info@alphafunding.com, or you can call us at 732-657-2014. We're on Facebook and Instagram and all those other things. Look for Alpha Funding. Something like that, right?
Yeah.
All right, awesome. And last thing, remember to like, subscribe, comment to the show, and we can get you better content if you guys give us more feedback. So thank you.
Better content than this? No, just kidding. Just kidding. I'm joking.
Thank you, David.
Thanks, guys.